Hey, welcome back to another Skag Academy video lesson. In this lesson, we will be going over the basics of the volume indicator. I'll be taking you through some ways that we use it. But first, before we get into all that stuff, let's make sure you have it added to your chart correctly. So load up TradingView. What you're going to do is just go to the indicator section on there, and you're going to type in volume. You're going to make sure it's the same one that's in the screenshot. There should be no additional words in its title. The default settings are all you need, except you might want to pop in there and change the color of the bull and bear volume to match whatever color scheme you use for your bull and bear candles. Alright, family, so let's jump into some of the basic points about this volume indicator, right? So this is a basic but very powerful indicator. It is available everywhere. What is happening with this indicator is that it measures how much trading activity occurs within a specific candle, or as we like to call it, the effort behind a candle, right? Bringing this back to the law of effort, which is one of the three laws of the market for us. Right, so the larger the profile, the more effort that's involved. Again, the smaller the profile, the less effort that's involved. Every single candle does have its own volume profile associated with it. And again, as you adjust the time frames, the volume profiles will change as well. The color of the volume bar will and should always match the color of the candle. So if your bearish candles are white and gray like mine, your bearish volume should also be white or gray. If your bullish candles are blue like mine, then again your bull volume should be blue. Now, the last thing I want you guys to know is that volume is as dynamic and random as price action. This just meaning that they are two sides of the same coin, right? The price someone pays, right? That is the price action, the actual price someone pays. And the volume is the quantity of said asset, right? How much they're buying, how much they're selling, or the effort behind the total order that they are putting into the market. So now I'm going to talk about a couple of different ways that we use volume. We will also have some advanced lessons on this, but just to start, I want you guys to focus on these three things. So one is being comparative analysis. When using volume, we're always using it in comparison to previous price efforts from the market. So for example, we have this chart example on the right side. If price is testing a resistance level, we will look at its current volume in comparison to when it was last at these levels and compare how committed the market is, what the probability that it holds may be. All right, so in the example to the right, we see as price continues to test the same highs, the buy side volume continues to decrease, and this is what we call an example of price effort divergence. So just to kind of break down what's happening in that chart, you have the red circle all the way to the left. You can see price kind of pushed to the upside. You also have that very strong bullish candle. And then if we look at the volume associated with that move up, we see it's pretty high volume. Again, the bearish candle that came in was a little bit lower volume, but we can see leading up into that resistance, the amount of effort that was given by the market to drive that, which is why you see kind of two highlighted areas, because one is highlighting the high candle of the resistance and the other is highlighting just the bull effort that took us up there. And then you can see the next time we begin to push up into that area, which we have circled, is the yellow circle. Again, price moves up into that same price point. I think buying volume is beginning to get weaker than it was previously in the red. Now, if we take a look at the third time we've come up there, we see the green circle. And again, the green volume that is marked there is substantially lower than it was previously at the yellow and red levels. And then the fourth and what is like final time that it comes up to this resistance, again, we can see that it is now failing to even get as high. Again, having the same volume that it did previously, but still being lower than all of the other buying effort every other time we've come up to that resistance. So we call this comparative analysis. It just lets us know that a level, buyers are becoming less committed to breaking the level, and that maybe sellers will easily step in and actually hold a price below that point. Another way that we look at volume is to determine whether or not a move is sustainable or unsustainable. One way we look for sustainability is that we use volume to help us confirm overall sustainability during structure breaks. So when price moves from a trading range or from a new low into a fresh high or fresh liquidity, we would ideally want to see an increase in volume, as shown again in this example. This shows us that more effort is being used in order to clear the level, and so long as that remains true, we should also continue higher. All right, so higher volume equals higher effort, which equals sustainable or sustainability. All right, so we can see the first structure point there that we have marked all the way to the left. We can see the buy volume associated with that. It came up, it formed a high on pretty decent, bull volume in comparison to everything else. We could see that it had a nice pullback, and then we could see when it came back up to that area and began to break higher, that it did so on higher than previous bull volume, which does give us sustainability. Now let's talk about unsustainable moves. This is the same thing. We're using volume to confirm what is essentially a fake breakout of a range or a new high. This is when price pushes past structure, and this happens on declining volume. Right, so this shows that less effort is being used to breach the level, and it is likely to return back into the range. Right, so lower volume, lower effort, unsustainable. Right, so if we take a look again at the chart, we see at the first red circle, price makes a resistance level. We see the buying effort associated with those levels. And then we see later on when it breaks that structure and forms the price action up at the yellow circle, that it is doing that again on lower buying effort, which leads to unsustainability. And you can see how price eventually spilled right back over into the range. So these are the few ways that we look at price action and volume at a basic level. I hope that you guys start to hit the charts and apply this, start looking for sustainable and unsustainable moves, start looking at comparative analysis as you're looking at your ranges. With that being said, this lesson is complete. I will see you guys in future lessons. And as always, if you have any questions, comments, or concerns, feel free to write them in the community section or down below.